Welcome back to the channel, guys, and thank you for tuning in to another great video here. Today, I want to really show you a quick way of how you can become profitable. Yes, if you are a beginner or new trader. It's not a lot that goes into the strategy I actually use, so you need to really take the time, follow the steps, rewatch this video if you need to a bunch of times, okay? Also, I want to let you know that this channel, these videos here that I've put together are great informational content, value pack videos. So I would highly recommend you going back and watch some of the previous videos as well. Now, if you are someone, lost my voice there for a moment. If you're someone that's really interested in really digging deep and understanding, I would truly recommend that you take a look at becoming an elite member here on the channel. Again, an elite member here on the channel. You may be asking, what do you need to do? All you have to do is click on the membership tab on the home page here on this channel, okay? And you will find two tiers, the loyal channel supporter and the elite member tier. Now, with the elite member tier, you get all the bells and whistles, the perks and rewards. Guys, it's only $6.99 a month, okay? It's basically the price of a cup of coffee that most of you would spend daily or more daily on a price of a cup of coffee. So, $6.99 a month to be able to really grasp an understanding of how I trade. You may be asking what's included. Well, it's a video playlist that I put together, links of videos to two videos that provide great content and information about the inside, scoop of how I actually trade. That includes my strategy and breaking that down, okay? And as well as live trading sessions or live trading videos that you can watch as well, in which I go into detail and talk about trade entries. But you also receive the trade breakdowns. What the trade breakdowns actually give you or show you is as if you're sitting next to me, okay, or maybe virtually. I basically run through my trade setups, explaining in detail what I was thinking prior to or leading up to a trade, as well as why I took that trade. So lots of traders have found that very valuable, okay? So they're able to maybe incorporate it into their own style of trading or maybe learn something new. So you take it how you want to take it. But look, for $6.99 a month to become an elite member here on this channel, you're not just, walking away with and being able to gain access to the trade breakdowns and the video playlist videos that I put together, but also what you receive, you receive the other perks and rewards, which are the priority, reply to comments. So if you respond to me or via YouTube, I see your messages firsthand, able to respond to them. But also what you receive as well is the loyalty badges and the emojis. But one of the greatest aspects to it is really supporting me as a content creator here on the channel. I appreciate that, but I'm giving something back as well, okay? That's those perks and rewards. Most individuals that sign up to become an elite member, they do so because, it's just a means of, again, supporting a content creator, but also I'm giving you the trade breakdowns. Also, I'm giving you the video playlist to where you can go and watch videos that I've hand-selected that I feel are basically, a comprehensive tool set of videos that I believe that would kind of point you in the right direction and allow you to understand my style of trading. But without further ado, I don't want to talk about that too much. I really want to go ahead and jump into this video. But before I do so, please, if you have not subscribed to the channel, please take the time to go ahead and sub by clicking on the red button down below. Click on the bell next to the sub button, and please make sure to turn all your post notifications on so you never miss one of the uploads here on the channel. And as always, please drop a like on the video, okay? It helps me and it helps the channel grow so we can, put the information in front of thousands of viewers out there, okay? I want to be able to help people so that they can also become profitable traders as well. So, what I have to share to you today is one of the quickest ways, as I stated earlier, so that you can turn your trading around, especially if you have a small account, okay? Yes. If you want to grow your account, please, the strategy in how I trade is supply and demand. I look for areas to where there are either aggressive buying or aggressive selling within the actual market. I'm going to run down or go through you and show you an example today of a trade that I just posted earlier on Discord. Actually, I posted 3 of my entries on Discord. All right. And if you're interested in joining our Discord, simply find the link to it down in the description portion of the video. There is a channel, what's called the trading floor. That's where we as traders come together on a daily and provide screenshots of our actual trades. And lots of people, ask, about the setups we take or the levels or zones. So they're there, okay? Become part of a great community. All right, so here it is, guys. I just want to show you. If you don't know much about supply and demand, I highly recommend either you watch some of the videos on my channel, become an elite member, or actually maybe go outside the channel and learn on your own, okay? All right, so however you want to do so, okay? But I have tons of videos here on my channel to where I have live trade sessions where you can watch me trade, as well as tons of videos where I talk about supply and demand and how I use it in my own strategy, okay? Okay, so basically what I look for is a step-by-step approach, all right? Now, I cover this many times in videos, but the number one thing that I always want to see as part of my strategy is always a break of structure, either into the up direction or the down direction, okay? So, this red box right here, you may be asking, well, what is that, okay? Well, this is marked as an area of demand, okay? All right, but first, like I said, I want to see a break of structure. Now, we have broken highs for the year. I'm not gonna say all-time highs, but highs for the year. Okay, I think the high was let's take a look here. Sorry about that. I believe the annual high or yearly high so far to date with 2023. Let's see here. I think it goes back further than that, guys. Please forgive me. I'm trying to find. I think it was 42, 43, somewhere around there. All right, was the high for 2023, not the all-time high, okay? But regardless of the fact, what I like to see is the market moving in a certain direction, okay? Supply and demand works well when the market is trending, okay? So if we're making higher highs and higher lows, what do you want to do? You want to look for an opportunity to do what? Go long, all right? So in that case, we've been making new highs, okay? Breaking and making new highs and breaking structure to the upside. So with that said, we have price high, higher low, high, higher low, high, higher low. Just making, basically climbing a ladder to the upside, all right, of the market. Now, what I saw here was when price made this high right here, okay? Pull back, made a new high. So basically, when I say make a new high, I'm just not talking about the wicks of a candle taking out a previous high, okay? Yes, that would be considered a high. But in order for you to have an actual break of structure, you want to have a close of a candle to the upside, taking out a prior high, okay? So we had a high here, price pulls back, we get a break of structure to the upside right here, okay? So you see this high right here, sitting here at, let's say, 42.96 and 3/4. We have a wick that goes above that at 42.97 and 3/4 as well. We get a pullback, okay? And the next thing I want to see is a close of a candle to the upside that breaks the prior high, including that wick, okay? And it does. We get a body close of a candle here at 42.98 and 1/4 and another break to the upside here. Now, what we have when price starts to break structure, meaning taking out here this high at 42.97 3/4, we have, demand areas. The key demand area to me that stands out here is this zone here. I'm going to talk about that, okay? Because we get a break of structure to the upside here, okay, above this area here. Pay attention, guys, because this is how you can grow a small size account. Now, I trade the ES, and I'm not telling you to trade the ES unless you have a certain size capital. If you are a beginner trader or a new trader starting out, I would recommend you going over to the MES, the micro ES, okay? Because first of all, you're not risking as much, all right? Especially if you only have a certain amount of money to trade with in the markets, okay? So if you only have a certain or limited amount of capital, trade the micros to build up an account. And once you get to a certain amount, then maybe you want to switch over to the ES. Now, I'll talk about that as well in other videos. As far as how much money do you actually need possibly to start trading, I always talk about 10 times the margin, okay? So go back and watch some of those videos as well. 10 times the margin means whatever the margin is for that particular account to trade, I would recommend having 10 times that amount to trade, and that's per contract. So here for the ES, it's $400 a contract with my broker. So for instance, if I want to trade the ES with one contract, for me personally, I would like to have at least $4,000 in my account. 2 contracts, $8,000. it just saves you from blowing your account. Okay, so if I have a losing trade and I'm practicing proper risk management, then the key to that will be that I'm able to, you know, get out of a trade and still have the funds to be able to get back into the market. All right, lots of traders make mistakes where they put a small amount of money in their account, thinking they're going to be able to jump into the ES market, and then they blow their account real quick. Okay, because there is a margin difference, there's a tick value difference there, so you have to understand from the MES to the ES. So please, if you have a small size account, I recommend once again starting off with the MES. Okay, micros. All right. Either way, look at here what I'm talking about supply and demand. All right, this was a demand zone. If you don't know what a demand zone is, again, it is aggressive buying to the upside, but I always want to see a breaker structure. So I'm explaining this in detail about this trade setup that I took. Again, this will help you grow your account, guys. All right, if you follow the step-by-step procedure. Now, you can take how I actually trade, the strategy I use. I'm not telling you to trade just like me, but you can take it and put your own twist on it. Maybe you have a certain strategy that you use, that you are you don't wait for breaker structure in the case with maybe it's a support and resistance style trader. Whatever the case is, maybe you just want to incorporate supply and demand into a certain strategy that you currently use. All right. So look, the breaker structure to the upside, I'm looking back here at this key area of demand. Why am I looking at this key area of demand? Okay. All right. Once we get the breaker structure where price closes with a candle to the upside, taking out this prior high here, I'm looking at this area here because it's untested. You may be saying, well, what does that mean to be untested? It's an area where not only do we have aggressive buying, but we have a imbalance back at the area of demand. That, to me, is what makes a high probability setup, okay? Now, once I get the breaker structure and price comes back to this zone here, all right, we got the imbalance. It's a demand area as well. Look, there's three things that took place there. Breaker structure, okay, pulling back to a key area of demand with an imbalance. We always have to think about what is the market trying to accomplish. When the market moves away from an area and it breaks structure and leaves behind the imbalance, what do you think the market's always trying to do? First and foremost, it has to rebalance itself, okay? If there's orders that the institutions have left behind that didn't get filled and there's an imbalance there, they're going to want to come back, okay? Correct the market, fill in or come back and transact at that area again and pick up those orders to move the market in the same direction in which they were originally trying to move here, okay? In this case here, the market was moving to the upside here. It left some orders behind here. It's going to come back to that area there, fill the imbalance, transact at that area or that zone again, just to do what? Fill the rest of those buy orders to push the market up again. Now, we as retail traders, we do not know how long that's going to last when they come back to that area, but you want to wait and take the opportunity. When it gets there, you see the rejection, go long, okay? So this part here has fulfilled every part of my strategy. The breaker structure, demand, imbalance, resting orders here that didn't get filled by the institutions. They pull back to it, all right? Now, this is where they kind of think they're trapping traders, okay? You have to be very mindful of this type of setup and this type of move or behavior in the market. Look what happens here. It pulled back, okay? It breaks lower to swipe this area of liquidity. But this is a sell stop run, okay? And no people who entered right here to go long, they come back here to stop the traders out just to push the market, to fill orders that they were initially trying to fill, to stop sell stop or stop hit resting sell stops and push the market higher. That's what they are aiming to do at all points, okay? They're trying to take out areas of liquidity and run buy or sell stops all the time, okay? Your stops could be at the right here, say for instance right here, there's buy stop order sitting right here, the market pushed down, they come back, they stop traders out right here just to push the market a little lower. Sell stops resting here, maybe down here. They come back, imbalance right here at the demand area, they come back, hit those sell stops, grab liquidity, boom, take off to the upside. Once they come back to transact at this area. So you have to understand what the market makers or the big institutions, all right, the banks are really trying to accomplish. They're only trying to, I've talked about this before, to do two things. Hit areas of liquidity and hit buy stops and sell stop orders at where those areas of liquidity are resting in, okay? Understand what's taking place here. Now, What happened right here was they came down, hit those orders right there, sell stop orders right there, or hit the sell stops right there, okay? When they came down there, you see this candle right here, all right? This one candle, when it came down here, it wicked below this area slightly, okay? All right, so I didn't jump in right there. It pushed a little lower. They swiped the sell stop orders right, or sell stops right there, okay? And when I saw that right there in this next bullish candle, this hammer candle to the upside, once it closed, I immediately went ahead and went long, okay? Why? Because I knew what they were trying to do right here. They were trying to take out these stops right here, grab this area right here. Two things here. They had an imbalance right there, and then they got sell stops right there. So they're coming back to fill their orders, stop traders out, like I said, guys. And when I saw this next candle to the upside, I went long. You have to be able to see things like that, okay? You see, this isn't rocket science. Just pay attention to the flow of the market. Order flow is what it's called. To understand what the institutions or banks are really trying to do in the end of all things, all right? They're either trying to, like I said, move the market higher or move it lower, okay? But you have to understand their goal, all right? And that is to stop traders out and collect money. That's all it is, all right? Run stops at either end, to the upside or to the downside. So this was a pullback to demand, and that's why I took that trade to go long. For anyone that's out there asking the question, especially in the Discord community, why did I go long here? Because it looked like they were trying to, break lower, and they pushed past this area. They did, but that was only to hit those stop orders, okay, those sell stops, and basically just trap traders, okay, in a sense, and they move the market higher. Just understand what's going on there. So once you understand what the institutions, the big banks are trying to accomplish, all right, and you merge that together with a powerful strategy like supply and demand, the trades are going to be in your favor, okay? I'm not going to say and tell you that and guarantee that every trade is going to work out, but you are putting things more in your favor when you understand the number one thing is what the institutions are trying to accomplish, and that is reaching for areas of liquidity, all right? All right? Hitting buy stop and sell stop orders, okay? All right? When you couple supply and demand, okay, with what the institutions are overall trying to accomplish, all right, they want to try to trap you. They want to stop you out, okay? So when you see an area in the market where there's an imbalance, in this case here at a demand area, you have to think to yourself, why did the market shoot up so quick? Gap and leave an area of an imbalance where price didn't come right back to the area, because you know the market likes to do what? Push, pull back, and push, right? If it's moving to the upside. So in areas where it pushes and doesn't come back to the prior candle, okay, but just immediately takes off, they did not fill all their orders. They couldn't get all the orders filled. So if there's an imbalance there, they want to come back to that area. Understand that, all right? And they know that area where retail traders may have also put in their orders to go long. Their sell stop sitting right below that area. So they'll come below it a little bit, okay? Swipe those areas, okay? Then they'll fill the rest of their orders with intention to fill their orders and push the market higher. So they accomplish two things. They stop traders out and they fill the rest of their orders. Understand that. So when you can grasp what's really going on and see on your charts, it's laid out in the charts, guys. It's just a matter of really tuning in and seeing. Look, this area right here, green candle, green candle, green candle, broke to the upside, broke structure. Oh, what happened here? Oh, okay, imbalance. They left something behind here. People, meaning retail traders just as well, probably went long right here. Let's come back down here, stop them out, fill our orders to push the market higher. That's all I'm going to say about that, okay, guys? You have to read the charts as imperative, all right? Simple order flow technique, okay? Coupled with supply and demand, all right? Understanding the institutional side to market structure, and you have put the trades in your favor. That's all I had to share with you guys today. I appreciate you tuning in for another great video here on the channel. If you, again, please do me a favor and smack that like button if you found this information and this content in this video very valuable. I'd appreciate it. That's all I have. I'll see everyone in the next trade session. Again, my trades that I took today are posted over on our Discord community. And that's it. I'll see you guys in the next one. Take care and have a blessed day.